the profit, then we do commodity murabaha. Right. Now, the payment, the issuance of redeemable, convertible, unsecured Islamic debt securities will actually represent two things. The first one is bai'udain bisilah, the other one is the murabaha leg. So we cannot call this murabaha because murabaha is only on the second leg. We cannot call this bai'udain debt securities because the second leg is murabaha. So how to do that? I still remember my initial proposal was the name under the name of murabaha. And she said no, murabaha is only captured in the second leg. What about the first leg? Then some people free of charge come with this new term, RQID, redeemable, convertible, unsecured Islamic debt securities, right? To represent that debt. Okay, that one. So now TDP will issue RQID to Malacca Power. Alright. This RQID is actually a debt instrument. A debt instrument. It is Islamic debt securities, which is debt instruments. Now, from Sharia point of view, remember, one of the features of loan stock, it is convertible into shares. The problem is that this is issued using debt. From Sharia point of view, you cannot use debt to contribute as capital in musyarakah. So now you cannot convert this RQID to become shares into TBP later. Why? Because it is a debt. So how to do that? Can I just skip this process? The one that I mentioned is in the process. So how we do that? We use commodity. We use commodity, so the contribution in, once we want to convert, instead of converting that debt, we use a commodity as contribution in kind. So now the company is there, we contribute a commodity and the company will issue new ordinary shares to represent the contribution of the commodity as in-kind contribution to the musyarakah. That is actually the normal OS, ordinary shares. Okay? So instead of contributing the debt, we contribute the commodities as contribution in kind. That is the process. The RALs work the same way. The only difference in RALs, we have to first convert. The word convert is also not agreeable by the Sharia, the SAC. They said we have to first retire the RALs and reissue RAMs. We have to retire conventional RALs, and in the place of RALs, we reissue what we call redeemable unsecured murabaha stock. How it works? If you have experience involving in converting its conventional bank to become Islamic, it's the same way that we do here. All the process are a process of converting conventional bank to Islamic bank. The only difference, there we convert a bank, here we convert instruments. The process and everything is the same process. By terminating the existing RALs and issuing a new, what we call a new RAMs. That's basically some of the product that you have in the market. There are some other product coming very, very soon, I believe. As I mentioned just now, in Malaysia, you have gold ETF, I think, coming very, very soon. You may have seen very, very soon also some stapled securities, stapled bond, and so forth and so on, also will be introduced in the market. With all, and also, as you are aware of, a lot more will come on sukuk wakala. In the market nowadays, there are not less, in my understanding, in my knowledge, not less than 5 or 6 variations of sukuk wakala. Okay? Sukuk wakala where it is only 2 underlying, sukuk wakala where there is 3 underlying. In the sukuk IIB, there are more than 4 underlying. So there are a lot of variation in the practice of sukuk wakala bil istismar, which I believe if you involve in the capital market product, it is a new thing, especially if you are in that market, a new thing that you have to grasp your understanding on, so you can benefit also and you can drive also on these new changes. Thank you very much. I am willing to take any further discussion on this. Assalamualaikum warahmatullahi wabarakatuh.
Thank you very much, Dr. Aznan. Wow, it's quite heated discussion. It's heavy load of information that we gather from Dr. Aznan's session, and definitely a lot of new jargons basically. Okay, particularly for the students, this could be new to you. I guess Dr. Aznan are willing to have another session with students, for example. And then I guess there will be another session that maybe we can invite Dr. Aznan just to talk on sukuk wakala, as mentioned by him just now. Okay, without further ado, I would like to open the session for any questions. And let's see, can I have a raise of hand as regards to anyone who would like to raise questions, so that we can decide the mode either to respond immediately, or if there's many questions, we have to collect the questions.
Bismillahirrahmanirrahim. Assalamualaikum, Dr. Aznan. Thanks for a very enlightening and somewhat sometimes confusing jargon-filled presentation. One observation and one question, Dr. Aznan. The first observation is with regards to the new financial ratio benchmark. If Dr. Rosni can go to slide number 9, we appreciate that. Where you say that the new financial ratio on cash to total assets is also included as part of the screening process of Sharia compliant stock. You also mentioned that it will only include conventional accounts or cash invested in conventional accounts. So the observation I have here is in the FTSE and also Dow Jones index, this benchmark was meant to ensure that the stock is not too liquid, above 33%. So that included both investments of cash in Islamic or even conventional accounts. Whereas here you specifically mentioned only conventional accounts. Now the implication of this is if cash up to 33% in conventional accounts or less than 33 are considered Sharia compliant, it will very likely breach the 5% benchmark where interest income from conventional accounts is already in breach. So, which means it sort of becomes a bit irrelevant if we just say cash invested in conventional accounts is a benchmark. Yeah. So, just want to get your clarification on that. Is it just conventional or both Islamic and conventional? Secondly, if you can just spend some time again to share the ideas on the Adib Sukuk Perpetual and how that was considered Sharia compliant, especially on the part where clauses such as cumulative dividends or cumulative coupons, and also at the point when it is redeemed, at the point when it is non-call for a certain period, when it's redeemed at par. These are standard perpetual sukuk terms. The Adib Sukuk was based on Mudarabah. How was this overcome within international standards? Thank you.
You take the first question first and the second one, okay? On the first one, it's also even in FTSE also, even though it does not mention clearly there, it's still on the conventional as well, on conventional only. I see it also on the FTSE, and when we calculate on the 33%, it's still on the conventional only, not Islamic. Because the intention here is not to calculate on the liquidity, whether the company is liquid in cash or not. That one is another benchmark, receivables for that. This is only to cater for whether your company is so much having loan in conventional, or also having your money put in so much conventional. So means that if, say for example, much of your money put into conventional account, means that you receive a lot of interest. Receive a lot of interest. If the other way around, if say for example it is for loan that you get from the bank, so means that you have to pay more interest. So that is the intention of the 33% from SA perspective, not to check on the liquid or not of the company. Because you remember in Malaysia, what happened in Malaysia is that we don't have the prohibition of trading of debt. If we put that here, so you have already in any way contradict your previous ruling that allow for trading of debt. That is the reason why we don't have it here as compared to other people. That's the first one.
And the second one also not true. We have done some stimulation, to be frank. I cannot mention companies. Some companies that they still get the 5%, but they fail in terms of 33%. Based on the simulation that we have done, there are some companies who pass 5%, but fail 33%. Because it depends also a lot on how much interest that you get from that 33% benchmark. Okay? There are some companies that we have done study on, simulation done by the SC, not us actually, the SC, SCM team, where they pass the 5%, yet they fail the 33% because of the level of interest that they receive later on. IIiBF case is quite unique. It's based on mudarabah structure. Alright? What happened in IIiBF structure, I cannot open I cannot locate where I put my slide on that presentation. I can share with you later lah, with some payment lah. I'm joking, sir. I'm joking.
IIiBF is free.
Oh, today Dr. Rosni said in IIiBF everything is free. Fine. I'm joking. What happened in IIiBF Sukuk is that they will have a redemption interval. This one has not been mentioned clearly in the OC. That's why if you read the structure, you will not be able to guess what is the structure actually, because it has not been mentioned clearly in the OC. So what will happen is that, okay, say for example, it is perpetual, but actually they have redemption. So I'm the investor, for example, I put in this manner, okay, I investor, I put the money to you, you are the issuer, you are the mudarib, okay, I make a compulsory condition for you that you will get, when you invest my money, you will invest only a business that generate to me 5%. Are you okay? 5%. If you fail to generate that, okay, you are considered to have not been able to fulfill the requirement of my mudarabah. So then what will happen is that you purchase from me, that what we call liquidation. You will purchase from me that musyarakah sukuk. Once I get the proceed, I will reinvest back into you continuously up till maturity. So they will have what they call kind of liquidation every interval. If you fail to achieve, then fine. If you manage to achieve, that's why they have all the reserve account. You see that? Reserve account means, say for example, okay, now for a period of 6 months, the expected profit rate is 5%. Alright, 5%. So if I manage to get 7%, for example, 5%, if I decided to distribute, I will distribute. The remaining 2% we put into the reserve. Right. Come next distribution, but the musyarakah will be dissolved. Then you re-enter into new musyarakah. Well, you re-enter into new musyarakah, you use that capital that has previously there. Are you following? You use the same musyarakah, you will enter into a new musyarakah with the same rate or maybe the different rate. In this is perpetual, is the same 5 years. I'm not mistaken, in IIiBF is 5 years non-core. So 5 years. Every 6 months with the same rate. Alright? So come the next distribution, for example, if you manage to get 7 still, so now another 2 we put into reserve. Now you have 4 reserve already, 4% reserve. If say for example, the return that you get there is only 3. Are you following? You get only 3, you pay 3, another 2 will be taken from the reserve. If the reserve is not enough to cover, for example, then will be a compulsory liquidation. Means that the company failed to achieve the one that we have agreed on, then they will purchase from me at certain rate, certain price. And that price is actually to cover you back. That's why some scholars